Hi, this is Tony Sagami. Hey, I want to talk to you a little about India this week. The reason for that is that Merrill Lynch just came out with their new World Wealth Report. Merrill Lynch is very interested in the wealthy because that's who they want to sell their investments to. And what they're particularly interested in finding out about what they call high net worth individuals. And these are people that are worth $1 million or more, exclusive of their home and other consumer goods like cars and boats. So these are people that have some money to invest. And that World Wealth Report found some interesting things. The most interesting out of which was that there are 1.2 millionaires in India, and 10 of the 25 richest people in Asia are in India. Let's put that in perspective. In China, there's 477,000 high net worth millionaires. So that means India has about 2.5 times the amount of rich people. In all of Asia, there's 3 million people defined by Merrill Lynch as high net worth, and that's a 25% increase over 2008. Let's put that in perspective. America has 2.8 million of these high net worth millionaires. And what's interesting, for the first time ever, there's more of these high net worth millionaires in Asia than there is in Europe. That's the first time ever. And nonetheless, that tells me that what's going on in India is a pretty exciting place. You don't create that kind of wealth without creating a whole bunch of opportunity. There are over a dozen Indian stocks listed on American stock exchanges, but almost all of them are either technology or banks, so it's pretty limited in how you can get exposure to India. India is one of the few countries where I think you can get better exposure with ETFs than you can with individual stocks. There's 4 of them that you could take a look at. The first is the iPath MSCI India ETF. That ticker is INP. INP. Also, there's the Wisdom Tree India Earnings Fund. The ticker is EPI. EPI. Also, PowerShares India ETF, PIN. PIN. And the iShares S&P India Index ETF, INDY. Now, there's 4 of these, but one of them is the clear winner, and it is the iPath MSCI India ETF, the INP. And the reason for that is that it had 25% of its assets in energy sector, whereas the other 3 were primarily in financial stocks. Over the last 12 months, the other 3 earned 23, 22, and 26%. Good numbers. But the iPath MSCI India ETF earned 65%, or almost 3 times as much. So if you wanted to own one India ETF, that's certainly the one to invest in. And as a sidelight, there was something kind of interesting because that energy exposure I talked about, why it was number 1. One of the things that the Merrill Lynch survey found out was that the very wealthy have been avoiding financial assets and putting more of their money into tangible assets, namely art, coins, jewels, and gold. So that should tell you something by itself also, that the place where all the wealthy are putting their money, not just putting it, but also making money, is in hard assets. And lastly, there's a company called Emerging Global Advisors. They've filed a registration with the SEC for 2 more Indian ETFs. They're going to be more targeted. One is an Indian Infrastructure ETF, which I think could be fantastic, and an India Mid-Cap ETF. These don't have ticker symbols yet, and it will be a couple more months, but that's a heads up to look for those things. Until next week, this is Tony Sagami signing off.